Sunday, June 30th, 3:52 p.m. New York time. Welcome to Winning Wall Street's Money. It's the last day of the month. It's the last day of the second quarter of the year, coming in to start the third quarter of the year, halfway through the year. Going to discuss currencies as well as yields, correlation. The US dollar, king dollar, is very important in several aspects. One, it's considered safe haven currency. Many nations buy other currencies and hold them as a reserve. Many nations buy metals such as gold and hold it as a reserve. The United States does not buy other nations' currencies to peg it to value of ours. That's why we're a king, US dollar. Many nations also look at the US dollar as value for long term, meaning they may want not to have gold. It costs a lot to store gold, a lot. And the logistics, transport costs a lot. So when they buy US dollars, they may actually use those dollars to buy paper money, aka bonds and notes, but US treasuries. Much more safer than what other countries have to offer. When the Federal Reserve lowers interest rates, that also has an effect on the US dollar. Often weakens the US dollar. But again, US dollar is a safe haven currency. So Federal Reserve can lower interest rates, but not necessarily mean that that dollar is going to go lower. Different times. So we're looking here at the yields. The yields, you could trade the yields in the futures market. Again, the yields, you look at an example of a credit card. You might have a interest rate that changes every so often. Well, they're looking at the yields. Same with mortgage rates, auto loans. Yep. Some of them might be looking at the 30, 10, 5. Because when the Fed, aka central bank, changes interest rate, that affects the overnight interest rates between banks, not directly, indirectly to U of E. So the 30-year yield, here's the high at the top left, back in 2004. And now look at this. This was the high last year. We're making lower highs. The 30-year yield is declining. That would mean what? Well, that simply means the US interest rates are going lower. The 10-year yield. Here's the high of last year, 2023. And this year, we're grinding down. The 5-year yield, same thing. High of last year, high of this year, grinding down. And the shorter term one, the 2-year one, grinding down. Now, if you just look at the last few months, zoom in some more. Again, each of these are a month. We made a trend reversal. Here was the beginning of the year, went up, and we reversed. Same on here, same on here, same on here. If you invest in fixed income products, bonds, notes, CDs, well, if the yields go lower, you earn less income. If the yields go lower, your credit card charge you a lower interest rate. Just something to be situation awareness. If you want to be fixed in some financial fixed income products, you'd want to buy CDs now that are high paying before the yields continue going lower, and then you would earn less on your fixed income bonds and notes. Let's go focus now on the King US dollar. 20 years. This is 20-year history. Again, each candle is 1 month. So here's the low for the past 20 years US dollar. Back in 2008. And here's the high for the past 20 years, last year. Yep, lots of this information. You have people out there in the media and politicians saying the US dollar is weak. Some of them are saying it's near the low, but they don't own up and show charts. They don't show their source where they're getting it from. Well, anyway, charts don't lie. This is the fact. Plus, high of 2000 last year, 2023, the low of last year, 2023. So we're inside of range right now. Huge consolidation, building a lot of energy. Yep, a lot of energy. So the longer you're in this consolidation, sideways movement, the more strength it's building. And look what it's doing, higher lows. One would expect it to break out above this point, which is the high. Bullish dollar, bullish dollar. There are several major currencies inside the US dollar. We'll look at those now. The largest currency in the US dollar is the euro. Yep, represents the biggest percentage of the US dollar, like 57%. So look at this, totally opposite of the US dollar. Look at the euro. Here's the high for the past 20 years. Here's the low. Huge consolidation here and lower highs. Again, it's a tight consolidation. Buying on the bottoms, and there's still solos up here. It's just interesting still we have not broken out of the range of last year. Let's continue looking at some other currencies, see if we're outside the range of last year yet. Japanese yen. Here's the high. And look at this all-time new low for the past 20 years. All-time new low. So again, weaker Japanese yen is helping strengthen the US dollar. British pound. We're still inside the range of last year. Australian dollar, same thing, inside the range of last year. Canadian dollar, inside the range of last year. Swiss franc, good, still inside the range of last year. So if you understand what's going on here, a lot more stability in the major currencies. That's a positive thing. Do you really want a huge whipsaw like this? So obviously, the countries that are, there are central banks that are managing inflation, the value of the currency, are certainly doing better than many other countries. If you look at the value of the Egyptian pound, when I was there years ago, $1 got you like 3 or 4 British pounds. Now $1 gets you like, sorry, $1 got me like 3 or 4 Egyptian pounds years ago. Now $1 gets you like 50 Egyptian pounds. Terrible. They're having terrible problems there. That's the same in Lebanon and Turkey. Their currencies are terrible. Politicians made those policies in the past, and they haven't rapidly changed to improve. Mexican peso. Here's the low of last year. We broke above it this year, or we did take a dip. The point is, the Mexican peso is trending up. Doing retracements, trending up. Let's adjust this. And they just had elections this year too. Yep, elections matter. There we go. Chinese yuan. When it trends up, that's bullish US dollar. So again, dollar is stronger. And the cryptocurrency Bitcoin. Huge consolidation, lower highs. Be concerned. Safe haven currency. Keep an eye on the US dollar. That's it for the video. Thanks for watching.